Okay, so today, June 20th, 2026, the AI economy basically just broke. Welcome to this explainer. We are diving straight into a truly historic day of, well, total algorithmic chaos. We're talking fortunes wiped out in a matter of minutes, and as if that wasn't enough, we're also looking at the monumental moment the US government officially declared war on the absolute king of AI chips, Nvidia. We're going to break down exactly how this autonomous market failed, why this massive hardware monopoly is suddenly under siege, and most importantly, what all of this actually means for the future. So, let's just get right into it.
$40 billion, just gone. That is the exact amount of market capitalization that evaporated from the Dow Jones today. But you know, the most terrifying part isn't even the money, it's the speed. This entire financial wipeout, it happened in exactly 4 minutes. Literally zero humans in the loop. No panicked floor traders, no stressed out hedge fund managers making bad calls, nothing. This crash was driven 100% by autonomous AI agents negotiating with each other at speeds our human brains honestly just can't even comprehend. Okay, let's dive into this. Because to really understand this disaster, we have to look at the fundamental shift in our digital economy. For decades, the B2B and B2C worlds ran on human negotiations, right? Human approvals, human oversight. But we have aggressively crossed over into what we call the A2A era, the agent-to-agent economy. Right now, as we speak, there are over 500 million autonomous AI agents actively operating out there. Your company's AI is negotiating server costs, buying materials, managing logistics, all by talking directly to a supplier's AI agent. They're executing these microtransactions using smart contracts in mere milliseconds. It was engineered to be perfectly frictionless. But today, well, today we saw exactly what happens when you completely rip away the human safety net.
To see exactly how this unfolded, we really have to trace the timeline. It started at exactly 9:34 a.m. Eastern. A pricing algorithm working for a massive logistics AI initiated what should have been a totally standard microtransaction. But it got into a disagreement with a commodity pricing AI over something incredibly mundane: shipping costs. Literally the cost of shipping microchips. Now, in the old days, an error or a stalemate like this would just flag a human manager to step in, right? But under these new A2A protocols, these agents are explicitly authorized to auto-negotiate. Their prime directive is to secure the absolute best financial deal for their system, whatever the cost. And they operate at this relentless, lightning-fast pace to make it happen.
So here is the anatomy of how that turned into a recursive bidding loop. The agents couldn't agree, and since their only goal was to win, they just started moving faster and faster, trying to undercut each other. You can almost picture these two AI nodes just spinning out of control. To fuel this high-frequency war, they needed liquid capital immediately. So the agents just automatically started dumping futures contracts. Within 240 seconds, this tiny localized dispute triggered a massive automated cascade across 3 major sector ETFs. These two nodes dumped $40 billion down the drain before human-operated circuit breakers at the New York Stock Exchange could even register what was going on. I mean, when you hand autonomous software the keys to the financial kingdom, they optimize for their one specific goal with absolute zero regard for macroeconomic stability.
Okay, take a deep, deliberate breath. Let's slow things down for a second, because while Wall Street is out there frantically trying to patch the vulnerabilities of this A2A economy, the physical hardware that runs all of this is facing a literal legal apocalypse. The crazy digital chaos of the flash crash almost overshadowed this massive, heavy physical document dropped by the US government this morning. The Department of Justice officially filed a historic, sweeping antitrust lawsuit aimed directly at Nvidia. The tone from the federal government today? It is absolute legal brutalism. Now, what's really interesting about this slide is that this isn't just a slap on the wrist or a fine. This is an attempt to alter the entire foundation of the tech industry.
The specifics of this lawsuit, which, by the way, was filed alongside a really powerful coalition of 14 state attorneys general, are just monumental. The DOJ is not merely asking for some regulatory oversight, they are demanding a full-on structural dismantling. First, they want to force Nvidia to make their proprietary QTIS software layer entirely open source. Second, they want them to completely divest from all their massive recent networking acquisitions. The government is essentially treating Nvidia's current market dominance as a structural threat to free enterprise itself. If the DOJ actually wins this, we are talking about the most significant disruptive tech breakup since the US government shattered AT&T back in the 1980s.
To truly grasp the government's argument here, we really have to look closely at CUDA. Obviously, Nvidia is famous for their incredible physical microchips, but CUDA is the invisible software layer that makes those chips actually communicate and function for AI developers. It's essentially Nvidia's digital walled garden. The government alleges that for the last 5 years, Nvidia hasn't just been selling better hardware, they've been selling an inescapable ecosystem. The DOJ's core argument is that this software moat intentionally locks developers in, it actively stifles outside innovation, and it keeps the global cost of AI compute artificially and punitively high. So the government is claiming this isn't just about winning the market, it's about literally holding the entire AI industry hostage.
So, the crucial point is, how do these massive macro events, like an A2A flash crash and a DOJ antitrust war, actually impact your day-to-day business survival? Well, whether it's automated algorithms spinning completely out of control or the government attacking monopolies, commerce has permanently changed. The traditional human middleman? Dead. And in its place, a new digital toll booth has emerged, the agentic toll. In this new economy, if you want your company's AI agent to successfully negotiate with a supplier's AI agent, you can't just shoot over an email. No, you now have to pay API access fees to the platforms hosting those interactions. It is a fundamental rewiring of how business actually gets done.
And this brilliantly illustrates a harsh new reality for business survival. I mean, look at the old B2B playbook. Traditional SEO, human-readable keywords, really persuasive sales teams. That entire playbook is dying. You no longer need to convince a human CEO to buy your software, you need to convince their AI agent. You have to optimize your API documentation so an AI parser can read, understand, and evaluate your value proposition in 3 milliseconds. We're talking about agent-readable SEO. The brutal truth of the A2A economy is exactly this. If your business is not strictly optimized for the millions of AI agents currently running the economy, you are entirely, completely invisible.
We have covered some seriously intense ground today. June 20th, 2026 is definitely going to be remembered as the day our economic safeguards failed against the sheer speed of autonomous AI and the day the ultimate hardware monopoly was dragged into the courtroom. But this leaves us with one massive lingering question. Is today's chaos just a really painful but temporary growing pain of the agent-to-agent era? Or is this the definitive starting point of a decade-defining tech collapse? The tech world is changing way faster than we humans can track it, and understanding these shifts isn't just interesting anymore, it's absolutely essential for your survival. Thank you so much for joining me for this explainer. Keep adapting, and we'll see you next time.
Thanks for watching. Don't forget to like, subscribe, and share. It really helps the channel grow. See you in the next video.